We have started the concepts in economics. We have discussed about the microeconomics and macroeconomics. In the process of the macroeconomics, we have many topics. One of them very important is national income. What do you mean by national income? As the name itself suggests, the word nation talks about the political boundaries of the country. Income is the amount that is earned by the country. When do you say earned by the country? If it is an aggregate of all incomes of all the people in the country, we call it as national income. I am earning, you are earning, somebody is earning. Tomorrow you will earn as an engineering student. So all of us will do some work. When we do some work, we get some money. What we get is individual income. If you add the individual incomes of all, we get the national income. This is a simple logic. However, you must find a way to measure the income. You can't go to every person, what is your income, take census data and then give it. You can do census only once in 10 years, but not every day. But national income is to be measured every time, because unless you have a clear idea about the country's income, you cannot plan your expenditure. A country cannot plan its expenditure. So when there is a pandemic, complete lockdown, no activity took place, then there was no income in the country. In fact, expenditure cannot be stopped even though income is not there. So you have a minus value. So there is a deficit in the national income level during the pandemic time. So as a student of engineering and a potential engineer in a factory, you need to know the basic concepts of national income. So we will try to understand what it is. It measures the total value of goods and services produced within the economy over a period of time. You can take 1 year time and then you will have national income of a country per annum. If you take a quarter, you have a quarter one, quarter two, quarter three. Every quarter they have been giving the national income figures. So a period of time in the country's economy, how much goods and services are produced and what is its value measured in terms of dollars or in terms of rupees. You need to measure them, and that is called national income. That's it. Then when we say why is it important? Number one, you should, if you want to know the rate of economic growth, what is happening in the country, whether the growth, country's economic growth is going up or coming down. You can know only when you know what is the existing national income, what was the existing national income of the previous year, when compared to last year, was there any growth or not, you can know. What is the living standard? How people lived last year, how people are living this year. The difference we can measure only when you have idea about what is the national income of the country. When you have national income of the country divided by number of people, you will get per capita income also. With that income, everyone will be maintaining a standard. If the income does not increase but the prices go up, then the products will become dearer. Then you cannot maintain same standard. If you want to maintain same living standard, your income must grow along with the expenditure, that is dearness allowance or whatsoever it is. In the name of dearness allowance or whatsoever, employees will get, but others also should get. So to meet the increased level of prices, you need to increase the income. So you should measure how much was the income earlier, what is the income today. That only will help you in measuring the changes to the living standards. A distribution of income among the people, whether you can say that Adani, Ambani are earning more, and there are many middle classes, but where largest chunk are poor, you may say 10 years back we were saying. But today we say that there are good number of chunk have shifted from poverty to the non-poverty. If government is claiming, how far it is true, you should know national income. Then preparation of economic and fiscal policies. If you want to have a government has to may go for a good fiscal policy, it need to know how much income it is getting it. So national income concepts are normally defined in two ways. One is known as gross domestic product, gross national product, and you can also say net domestic product, net national product. What is gross domestic product? Normally, this is quite frequently this concept you must understand, because very frequently in examinations in short notes also you may get. Gross domestic product is defined as aggregate measure. Aggregate is total measure of production equal to the sum of gross values added of all residential institutional units engaged in production. That means those which are within India, residential institutions, what is their activity, what is the value added by them, what is the value that they have brought down from the previous year, what is the value they will be giving in the next year, the difference between the value that they produce at the end of the year and value that they have carried forward from the previous year, that a difference is called gross domestic product of the period 1 year. Similarly, gross national product is a market value. This is a cost value, this is a market value of all the products and services in 1 year by labor and property supplied by citizens of a country. So it's a simple terminology. And personal income, I have already talked to you that individually we earn. When you divide the national income with the total population in the country, you will get the per capita income, which is very, very important for economics and decision making. And you know, the very interesting thing is the national income is a circular flow of production. What I talked is not one-way production, it is a circular production, because production of goods will generate demand. And the demand, that is production of goods and services, will happen only when you pay to the laborer, when you pay to the capital owners or the stakeholders, or when you pay to the landowner in the form of rent, or you pay to the organizers in the form of profit. So land, labor, capital, organization, all four factors are to be paid in the form of as a compensation for them, and that alone will give us the income in the hands of people. Income in the hands of people enables persons who have willing to buy the products. Then that is called demand. So demand gets generated. Once demand gets generated, obviously people will have demand, and that will result, they will spend money. That is called expenditure. So a consumer expenditure will happen. The consumer expenditure happens, and consumer expenditure will go money to the companies, factories, and factories will be able to pay to the stakeholders, including land, labor, capital, organization. Again their income will go up, again demand will go up. So it is a flow of production, thereby national income is generated. So how national income generates, we have explained, and this is also diagrammatically presented, where you have households, businesses, in how expenditure takes place in the red color, and how you are getting the money back to the householders in the form of land, labor, capital inputs. They will put it on to the business, and the business processing takes place. Thereby business will be making payments to the households, and households will pay in the form of prices. So either way it happens. So you are paying in the form of rent, wages, etc., and you are business you are getting back when they purchase the goods with your money. So this is about the concept. Yeah, you have different methods in production. What do you call measuring the what do you call the national income? But what is important is the income derived from providing from different sources is added together and then put it. So you need to look to the formula. You can have a look over them, and then that will help you in future. But we need not go into that depth now. We can simply say y is equal to c plus I. What is y? What is c? What is I? Y is called income and C is called consumption, or what is the expenditure, consumption expenditure. So whatever country spends in 1 year, whatever you spend, I spend, everyone spends, add all expenditure, you get consumption expenditure. Then add income that is saved during this particular year by individuals in the form of banks or in the form of investments in companies or in the form of stock market, whatever that is income that is saved elsewhere during this particular year, if you add these two, you will get total income generated in the country. So that is a simple logic. That's what he says. C plus I is equal to Y. As of now, that is sufficient for you to understand. We can have some additions, subtractions, depreciation to be deducted. Those things are all for the people who want to spend more time on the in this particular subject. Now, the last aspect I would like to explain is what are the national income statistics. What are the uses of national income statistics? Whatever we collect, the measurement of national income, in what way it is useful, where do you use? Number one, we use it in formulating economic policies. I have already explained you. Number two, studying economic structure. When you say economic structure, where is the money flowing from the top to the bottom? The planning funds of the government of India will flow to the plan expenditure. The plan and non-plan sectors you will have. Non-plan is a routine administrative expenditure. Plan means they plan for a development, the development expenditure. That investment made in the development expenditure will flow into certain categories. A simple example I'll give you. This time 138% increase is made by the government of India towards the health sector, because the new vaccinations have come and they want to vaccinate entire nation either at cost or some price, or either free or some price. So the vaccination expenditure has to be done through hospitals, through clinics, through doctors, through nurses, through employment generated in health sector, pharma sector, manufacturing of the medicines, or you have distribution or the departments, complete health sector, the money will be flowing. So you should be able to plan that the money flows into the health sector, and thereby economic structure of the country will undergo change. Those who are nearer to the health sector in terms of employment will be getting more income, others will get less. This is my hypothesis. To test that, you need to measure it with the national income, sector wise contribution of national income. Intersectoral comparisons. When we talk about the intersector comparisons, I would just add a concept to you that is very relevant here, that the money that goes to you is the, basically we have primary sector, secondary sector and tertiary sector. These three are common. What do you mean by these three? Because we are talking about sectoral, intersectoral comparisons, I am explaining. Primary sector means mostly agricultural and fishing, or simply From the nature, if you take and consume it is primary sector. If you produce tomatoes and eat tomatoes, it is primary sector. If somebody produces tomatoes, you make a sauce with the help of machines and then eat, you are in the secondary sector. Neither you may produce tomatoes in agriculture nor you process tomatoes but only eat, it will come under the tertiary sector. In other words, it's the services sector where we contribute for the service by transport or by any other means of services, including software service, etc. That will come under tertiary sector. Initially, to measure the country, 1970s, if you take the data, and today, if you take 2020 data, what happens? 50 years change if you look into it. 1970, when I was in 10th class, I was informed that 72% of the population depend upon the employment. This is called employment, N. 72% depend on the agriculture, and around on 16% were dependent on services at that time. So 88, 12% were dependent on the industry. This is the employment at that time. But today you find that primary sector still continues to be the major contributor in employment, like 42% it contributes, more than about. And then secondary sector continues to be only 11%, but remaining 47% is being contributed by employment, is contributed by what do you say, the um tertiary sector. I'm just giving hypothetical pictures. So this is the employment part. But if you have income part also here, primary sector in 1972, primary sector was contributing more than 40% of income. And this is in 1970. And today, if you look into it, the contribution has come down less than 25%. And you find this was around 16% at that time. Even now it continued to be 16%. But major income we are getting from services sector. Here it was 44%. Today it is 49% or more than that. It is in fact more than that. Income was generated was very high today. So what does it mean? It means here 47% and 47%, no problem. But here you find 16% income generated was 44%. So there is a structural, you examine intersector comparisons you make, and then you examine and decide this is what happens in case of what do you say, the sectoral income. So these are all the things in economics we learn. Just one example I gave you. We can elaborate economic welfare, you can talk about international comparisons. All these things are possible with the help of national income. If you measure the national income, you can do all such things. So this is about the national income. You must have a comprehensive idea about it. Thank you.